now, and let's talk about by starting with FY24, right? FY24 was a challenging year with your revenue seeing a bit of a dip, even though the profits have ballooned 2.5 times. How do you expect FY25 to now turn out, sir?
So you have to go back to the last calendar quarter of 22 to understand that the IT sector hiring, if you recall, had just dropped off the cliff. And last 6 quarters, I think the IT hiring for the large companies in the country has been negative. That means the headcount has come down. So that kind of brakes that were applied made a big difference to the entry-level talent, which has been a significant part of our activity. So the IT training component last year, actually for this period, has been down 23% for the year. But to counter that, we had to work with BFSI. So I'm trying to combine the questions on profitability and scale. So while the year's revenue has been lower, we had to do a lot of things in the early part of this, in the first half, to start getting the effect. So the second half of this year is actually plus 5%. And the last quarter, this quarter, is up 24% year over year, if I see the period. So this has been a period of turnaround to deal with the shock that came with IT hiring. And so the change was done over this period of time. From minus 33% was the drop in quarter one. Second half of the year has been up 5%, and this particular quarter is up 24%. So this has been one big shift we've had to do. And quite clearly, the other thing we had to do was to become very concerned about costs and profitability. And so the margins are visible, I think, for this period of time. Year over year, quarter over quarter, is a significant improvement. So this has been actually a pretty challenging but interesting year where we had to shift gears quarter by quarter by quarter. And we could therefore look at the revenue implication, first half over second half. We can see in second half, year over year, we are up 5%. And so we are now on a trajectory of growth going forward. And the BFSI component we had to really step on that very hard, because that growth for the year is 49% year over year. So a lot of the gap created by the shortfall in the IT area had to be covered, and we could do a lot of that because the BFSI sector has seen a lot of growth.
Right. So that's the way how you've managed or made sure that the revenue is actually on track, or where the profits of the company are on track despite what happened the previous year ago. Good afternoon, Mr. Pawar. This is Shailu for joining in the conversation. And since you spoke about the IT hiring, you did speak about the dip as well. Has there been any loosening of purse from the IT sector? Have the hiring freezes been lifted now?
Well, I think while eventually people will have to hire, but there's also been a concern on what do the newer technology like Gen AI do for hiring. So we see that the industry is still circumspect. They're not in a big hurry to start adding people in the IT sector. And so another shift of emphasis for us has been the reskilling, because the industry is busy doing that. They're trying to look at internal talent to shift them. So some of the upper end programs which we had to emphasize. So for example, the digital architect program has been a very big contribution, big in terms of the shift, the nature of shift. So very senior people to be trained. So within the IT sector, while the entry level training has pretty much dropped off and will come back in the next few quarters, but the mid and higher level training is where we have put a lot of emphasis. And so we announced a few new range of programs for higher end people. And that also has been panning out in the second half of the year. So training by the IT sector will start coming back, but it's coming back in a different level within the organization. And we expect that as we go forward, while we will lose a bit on the entry level till such time as the hiring becomes large, we will be looking at an increase in what we do for reskilling of middle to senior level technical staff.
Right, and Mr. Pawar, what we also want to understand is in terms of your
early career segment, that's grown 16% this time in Q4. Working professional segment has also seen a very strong growth of 32%. Going forward, could we expect these growth rates to continue for these segments?
Well, since we are down 15% for the year or so thereabouts, we have to 11%. We have to obviously catch up. So it'll be coming off a smaller base. So we do expect that the growth we've shown this quarter, which is about 24%, we would expect growth year over year in every quarter to be upward of this number. So you can take that as something which we are confident with.
Okay, Mr. Pawar, thank you so much for joining in with us, giving us the outlook about the company as well as in terms of the trends that we are seeing in the IT hiring side. But thank you so much for joining in with us and giving us those numbers there. That was the management of NIIT joining in with us. Let's move on, talk about the stocks that have been